One of the market's premier surgical robotics makers plunged 14% today, even after beating on earnings. Welcome to Finance in Review, and today's U.S. market recap for Friday, July 17, 2026. Nothing in this video is investment advice. Stocks fell across the board to close a losing week, and later, we'll unpack why an AI chip design demo knocked the wind out of two software leaders. The S&P 500 closed lower, with no single headline behind the slide. Days like this often reflect positioning and fund flows more than news. The index finished at 7,458, down 1.01%. A small group of mega-cap names did most of the damage, accounting for roughly 90% of the index's point decline. The Dow Jones Industrial Average fell 407 points, or 0.77%, to close at 52,146. It held up a little better than the broader market. Decliners outnumbered advances across our tracked universe by roughly 3-to-1, so the weakness was broad, not narrow. The Nasdaq was the day's weakest major index, falling 1.4% to close at 25,520. Technology bore the brunt of the selling, led lower by a sharp drop in chip design software names. It was the second straight down day for the index. The Russell 2000, which tracks smaller companies, fell 0.42% to close at 2,962. Small caps actually held up better than large caps today, a reminder that the average stock did not fall as hard as the headline index. Still, it marked a second straight decline. The VIX, Wall Street's gauge of expected volatility over the coming month, jumped 12.2% to close at 18.8. That was its second straight daily rise, up from the mid-teens where it sat much of last week. It remains only modestly elevated by longer-term standards. 10 of the 11 S&P sectors finished lower, and the split tells today's story. Energy was the lone gainer, rising 1.2% as crude oil climbed about 3.5%. Healthcare and real estate were the most resilient of the decliners, each down less than 0.5%. The heaviest losses landed on the growth end of the market. Communication services fell 1.8%, weighed down by a steep post-earnings drop in Netflix. Consumer discretionary lost 1.6%, and technology dropped 1.1%, dragged by weakness in chip design software. The overall pattern was a clear rotation away from technology and toward energy and the more defensive corners of the market. Now to the individual stories, where we cover the whole market, not just the giants. The biggest decliner was Intuitive Surgical, a maker of robotic surgical systems, which tumbled 14.2% to a 52-week low. The fall came even though the company beat earnings expectations, as several analysts trimmed their forecasts afterward. Next came a pair of chip design software firms. Cadence Design Systems fell 9.5%, and Synopsys dropped 7.9%, after reports that an artificial intelligence model designed a working chip in 48 hours using only open-source tools, rather than their proprietary software. Netflix fell 7.3% following soft third-quarter revenue guidance, even as its latest results landed roughly in line. On the winning side, the leaders were mostly small biotech and electric vehicle names. Lucid Group, an electric vehicle maker, rose nearly 14% for a third straight-up day on no major company news. And SELLAS Life Sciences, a small biotechnology company, climbed 12% as investors positioned ahead of an upcoming clinical trial readout. Turning to the day's most actively traded names. Ondas, a drone and defense technology company, was the volume leader at about 214 million shares, slipping just under 2%. American Airlines traded roughly 177 million shares and fell nearly 4% ahead of its upcoming earnings report. Chipmaker NVIDIA saw around 138 million shares change hands and eased about 2%. Intel, also due to report soon, moved roughly 120 million shares and fell 2%. Heavy volume like this is common on a monthly options expiration day. Time for today's Market Minute. With volatility picking up, here is a useful piece of market plumbing. The stock market has an emergency brake, and it has 3 settings. If the S&P 500 falls 7% in a single day, trading halts for 15 minutes. If it falls 13%, another 15-minute pause kicks in. And if it drops 20%, trading stops for the rest of the day, no exceptions. These market-wide circuit breakers were built after the 1987 crash to force a cooling-off period before panic can feed on itself. Individual stocks can halt briefly too, on extreme swings. The takeaway: 7, 13, and 20%. Pause, and done for the day. That's the day. Stocks fell broadly, with the Nasdaq leading the way, down 1.4%, and the VIX jumping to almost 19. Energy was the only sector to gain, while technology and communication services lagged. The defining theme was a rotation out of growth and into energy and defensives. But it's Friday, so before we go, let's zoom out to the full week. Zooming out to the full trading week, it was a losing one across the board. The S&P 500 fell 1.55%, the Dow eased about 1%, and the Nasdaq led declines with a 2.9% drop. The Russell 2000 held up best, down just 0.5%. Energy surged nearly 5% to lead, while technology sank more than 5% to finish worst. The theme was a rotation out of technology and into energy and defensive groups. That's the market close for today. Thanks for watching, and remember, this is information, not investment advice.